please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Very good morning. Welcome to Chartbusters. Well, this is a show where we'll highlight a whole host of buzzing stocks, and there are plenty stocks that are buzzing in today's trading session. We thought the September series wasn't great, but we have started off the October series on a topsy-turvy note. The markets have come off the high point of the day. The mid-cap index are seeing a lot of selling pressure, and in fact, the advanced decline ratio should come up for you. That's telling you the real picture. Stocks like Infibeam, they're clarifying there's nothing really they have to disclose, but the stock is down close to around 53%. So the street believes otherwise, actually. Hey, Rima, good morning.
Hi, good morning. Well, the shareholders of Infibeam, Yes Bank, Indiabulls Housing, Finance, Divan Housing are all going to say, thank God it's Friday. Yeah. At least some respite will come through over the weekend at least. But let's first take it away with the top headlines. After the poorest series in absolute terms in a decade, the Nifty starts the October series on a shaky note. The key indices correct from the day's high, while the real pain is seen in the mid-caps and the small caps.
And mid-cap stocks are under immense pressure today. Infibeam sees a sharp crack. That's down close to around 50% in today's trading session. This is ahead of its AGM that's scheduled for tomorrow.
Apollo Tyres under pressure after minority shareholders of the company reject the reappointment of Neeraj Kanwar as the managing director.
And GAIL and GSPL gain in an otherwise weak market after PNGRB announced higher than estimated revised tariffs for key gas transportation pipelines. GSPL tells CNBC TV18 that top line will see a positive impact to the tune of from 25 to 35%.
And it's a weak listing for Ercon on the exchanges. The stock debuts at a 10% discount. It lists at 422 rupees versus an issue price of 475 per share.
Okay, what's the trade on the Nifty? We've come off the high point of the day. Ashwini Gujral joins us for a quick technical check. Hi Ashwini, good morning. What's the trade on the Nifty as well as the Nifty Bank? That's doing a relative outperformance today.
See, my sense is that both Nifty and Bank Nifty are ready for a sharp short covering rally, and a rally which could basically take us to the upper end of the range. And this is a time, I know confidence is low, people are not feeling too good, but this is the time to buy. The bears tried to hammer 10,900, 950 in the morning. They have failed decisively. I think, the short covering that people want in NBFCs, banking, financial, because of the bears, you are lucky to get into almost the absolute low. I think the 3 o'clock, 3:30 close will be very different from what you have right now. And once a bit of confidence comes in and once a bit of short covering starts, I believe this market will catch a lot of momentum on the upside, because it's so extremely oversold that it's absolutely impossible to take it down immediately unless you have this 11,200, 250 and people start breathing easier. So the issue is that everybody expects downside, and hence we don't see 10,900 breaking in a hurry. Individual stocks, UBL is a buy with a stop of 1430, target of 1500. I have given earlier the NBFC stocks, so things like Canfin Home, Bajaj Finance, etc. I have already given. So Berger Paint is a buy with a stop of 290, target of 304, and Exide is a buy with a stop of 265, target of 281. Hardly 3 or 4 banks are in the red. The rest of the banks, financials, are moving into the green rapidly, so that should provide impetus in the next few hours for the market to move up.
Okay, all right. Thanks so much for that, Ashwini. Well, moving on then, JSW Steel made its entry into the Nifty today, and I caught up with the CMD of the JSW Group, Mrs. Sajan Jindal, who spoke about the company's expansion plans, the possible listing of the international business at an appropriate time, and also will look to keep debt levels under control.
JSW has probably one of the strongest balance sheet in the steel industry globally, and so therefore we are really thinking of taking this to the next level. and we have already announced plans to take our capacities to 25 million tons without the inorganic growth, and with inorganic growth hopefully to 30 million tons, and then our vision plan is that by 2025 we want to be a 40 million ton steel company out of India, and plus probably 8 or 10 million tons we will have overseas.
And 10 million overseas. All right, so JSW Steel is on the prowl for sure. We have seen that in the past year or so. Not been very successful actually in a couple of acquisitions, but at least you got Monat Ispat out there. Tell us, how aggressive is JSW Steel going to be in terms of Bhushan Power and Steel? Is that an asset you want?
So we've been very, I would say, realistic in our acquisition strategy. We have never looked at that it's a must-buy kind of thing, because we don't feel that there is anything which is a must-buy. We don't want to regret at a later date that we overpaid and today we are suffering because we took a decision in few years ago. We had taken a decision in 2008 and acquired a plate mill in the US, and we regret it even today.
Is there a possibility of keeping the JSW Steel global dreams separate and the Indian story separate, or you want to keep it together under the consolidated name JSW Steel?
I mean, no, JSW Steel will be the main holding body, and we could see that we list the overseas companies separately, and merge them and list them separately. But this is a long story. I mean, this can't happen overnight. We have just acquired a couple of assets, one in US and one in Europe, and we have to build on them, and we have to create capacities there. And once that happens, then we may list that separately in New York or in London, wherever, and that would be still held by JSW Steel.
At what stage would you look at listing that entity? Would it be once you hit 5 million tons? Would it be 8 million tons, 10 million tons? Do you have any kind of
10 million tons? That's a minimum size. Then only we feel it's worthwhile to take it there.
The street, Mr. Jindal, has been waiting whether or not JSW Steel, being such a big outperformer, is it going to come ahead and tap the equity markets, or is JFE going to come and take a larger part of the listed company JSW Steel? Is a QIP in the works?
So no, so there is no plan for any equity raise as of today, because as I said, we have enough cash generation to handle our capital expenditure program. And also JFE, we have not made any plans to to give more equity to JFE. I think JFE is very comfortable at 15%, and we are also very comfortable with JFE holding 15%.
The promoter group is clearly very bullish on the stock. I was just looking at the Bombay Stock Exchange and the disclosures out there, and in fact the promoters have bought a couple of lakh shares even though the stock is at a lifetime high. What's the targeted shareholding out there?
There is no real target, but we whatever surpluses the promoter group gets in their annual account, we tend to, rather than investing outside the group, we believe that the best investment is in your own self. We don't have any target. At 42%, we are very comfortable. But if we were 51, we would be better off. But I don't think the numbers really matter to me.
Any targeted number in terms of debt, the net debt to EBITDA?
So we have sort of announced that 3.75 would be the debt to EBITDA, and I think 1.75 would be the debt to equity. These are the ballpark numbers, or let's say the Lakshman Rekha that we have kept, that we will never breach these numbers, because I remember at one time we had even breached 5 times debt to EBITDA. And it 2002 and 3 and stuff like that, and now we have made it 3.75, and gradually we are going to reduce that.
What's going on with regard to SR Steel? JSW Steel is part of the consortium. What kind of a stake do you all have in that consortium? How keen are you all in terms of the SR Steel asset?
Well, SR Steel is a good asset. It's an attractive asset. It needs a lot of improvement. We believe that we can do a great deal of justice with that asset, but I really don't know how it is going to play out, because also it is sub judice, so I can't talk too much about it, and I would rather keep it to this level, that it's a good asset and we can do good justice with that asset.
And in the consortium, any kind of number in terms of a stake that you'll have in the consortium that is trying to bid for the asset?
I think we have 25 or 26% stake in the consortium.
Welcome back. Choppy moves for the market. So now the Nifty and the Sensex are back in the green. It's an up move in names like a State Bank of India or a Bajaj Finance, which are helping on the way up. Yes Bank too, after hitting its 52-week low, has managed to rebound a tad bit as we speak. But VIP Industries is the stock which is currently on our radar on the back of the government hiking the import duty on bags, raising it to 15% from 10% earlier. To discuss the impact, we're now joined by Dilip Piramal, the chairman of the company. Good morning, Dilip, and thanks so much for joining in. First, if you could outline the impact on VIP Industries.
Well, the import duty has gone up by 5%, so that will mean about 2% cost increase, and that's about it.
Okay, so what percentage of your luggage is imported from which countries, and will you be able to pass on this 2% increase because you've already taken price hikes in the last quarter?
Well, we did not take a very large price hike earlier, and I don't think there should be any problem in passing on this hike.
All right, Mr. Piramal.
Of course, we will.
Mr. Piramal, yes, if you could give us some numbers, sir, as a percentage of your total, total sales, how much of it is soft luggage, and how much of that is imported from China? Is all of it imported?
No. In fact, about 50% of our total sales is imported from China, and all of that is soft luggage.
Okay.
So it's about 50%. The figure is 50%.
So on 50%, there will be an additional import duty, and you believe that the cost increase will be around 2%?
Yes.
Okay. Mr. Piramal, but apart from this 5% import duty, generally the rupee is also depreciated, so that is going to have a negative impact on your costs. There is a surge in the raw material costs. Crude prices, as we know, have also been inching higher. Yes. So if you could just tell us that in Q2, that's July, August and September, how would the raw material costs, compare to what it was a quarter ago and even a year ago? The increase that we've seen in your costs, blended costs.
Well, because of the depreciation of the rupee, the cost increase will be not more than 1.5%, because even the Chinese currency, the yuan, has also depreciated. So we try to nullify that, and because our Chinese vendors want, ultimately they get the yuan, the Chinese, their own currency. So we try and see that the dollar price does not increase too much.
Okay.
Okay. So in fact, it's because of the double impact that we are taking a price increase. If it was only just one of the things like the currency increase, we could have managed without taking a price increase.
Okay, so Mr. Piramal, 2% because of the higher import duty, 1% because of the currency fluctuation, and you're saying that you can pass on the entire cost increase to your customers. So then can we assume that your margins will stay at what we have seen in the past?
Well, that is our objective, but we have to also see what the demand, how the demand pans out in the next quarter.
So give us a rough number, sir. What kind of a margin number can we work with for FY19? And I think the last time you joined us, you told us that your top line is expecting to grow by around 20%, right?
Yes.
So what kind of a margin number?
Well, our margin, the biggest contributor to our margins is the volume growth. So that is not very certain, because if volumes grow, then the margins really shoot up.
Okay.
The impact is much more than any price increase on the variable costs.
Okay.
So it's very difficult to give an exact number.
Dilip, why are you saying the volume growth is not certain? Is the demand environment not as robust as what we saw in Q1?
No, the demand environment is very good. It's more or less the same, but there is a base effect, because last year there was the GST introduction. And in the first half, there were sort of many variables, and like in the month of June, the sales were very low. So we have to see how this base effect impacts us in the next half. So we are being a little bit cautious. And it's better to be
So your
more
own
prudent
prognosis of your volume
than-
growth in FY19?
is very good. Yeah, it's very good. It's about 20%.
Okay.
Yeah, so, Mr. Piramal, you're telling us your revenue growth will be 20% for FY19, or is it the volume growth? Because we need to factor in some price increases as well.
Well, it's more or less the same thing. I mean, because our price increases are not so much. So I'm giving a rough figure.
So
you know,
most
like
of the
one would give a
growth on the
band,
top line
so
will come in
let's-
because of volumes, right?
Yes.
Okay, all right. And also, what's your market share at? You were telling us the last time around that your market share has been growing. You'll have been moving into the unorganized market as well. That's giving you an opportunity.
Yes, but when we compare market share, we compare it only with the organized sector.
Yeah.
And we reckon it's around 55% at the moment.
Okay. Thank you, Mr. Piramal. It's a pleasure speaking with you. We've run out of time, so we'll keep the questions, for another day and another chat. Slip into a break. On the other side, Dinesh Engineers IPO is open today. We'll get chatting with Dinesh Kargal, the chairman and the MD of the company, on the other side. Stay tuned.
Well, there's a new kid on the block likely in the coming month or so. Dinesh Engineers IPO, that opens with a size of around 100 and in the range of around 183 to around 185. But we have the management with us in the studio. Hi, sir. Thanks so much for coming down. If you could give us, some details. Why are you raising this money and what will it be used for?
Sir, we are doing our new network, going to do that more than 5,400 kilometers. That's why we are raising the funds.
Okay.
It's our own network.
Your own network.
Yeah.
So just for the benefit of our viewers, let's break up the company's business into three key segments. One, of course, is telcos, and second is, that's about 99% of the revenues come from telcos, which is divided into two parts. One, the kind of work that they do for players like in Bharti, Vodafone, Idea, Reliance Jio, where they lay down the fiber for the company as per what the company requires. But secondly, they also lay down their own fiber network, which they will lease or rent to any telecom player, whoever wants it. And 1% of their revenue actually has started coming from MGL, where they've started laying down gas pipelines in the city. So that is roughly the breakup. So this 5,400 kilometers you're laying is for your own fiber.
Yes, we are laying to our own fiber. We lease to the telecom operator and ISP operator.
Tell us the difference in margins for all these three.
Yes, this is the EPC margin is as we are doing for the vendor. That is in the telecom operators giving to all the material. We are doing the only services part.
Okay.
That is one part. Second
That
part.
is margins would be?
That is margin. It is nearly 20%.
Okay.
Plus minus.
And if you...
And we are doing the in challenging area, and that's why we are putting the
And
margin
if
also.
you lay your own fiber and lease it,
Lease to the telecom operator.
then the margins there?
That margin is really, that is depending upon the area we are doing. And margin also it is plus 20% one.
So it's the same margin?
Yeah, and it is after every time leasing, it is monetization of the fiber. That will the margin is going to the higher level.
Okay, so what if you could give our viewers some kind of a guidance in terms of numbers you're looking at for the coming year, that's for FY19 as well as FY20, the margin as well as the top line growth. In the last few years, the top line growth has been quite phenomenal, actually.
Yes, we are doing in more. Earlier we are doing it work opportunities are very less. Today we are getting the opportunities are more due to that is the fiberization of in India. That 4G to 5G, fiber requirement are more. That's why business also we are getting more.
Right. Now, what kind of numbers can we look at? What kind of revenue growth are you looking at for the coming year for FY20? Let's talk about FY20. What kind of a revenue number should we be looking at? Because all your investors will want to know those details. And what kind of a margin outlook?
Sir, you know that in government also it is opportunities are giving to the telecom developments due to the 4G and 5G. Further, future business are more. So I think so. Next year also we are good doing.
Last year you did 300 crores.
300. This year we are going to already PO backed is 420 crore plus.
That's your order book.
The order is already booked.
So what kind of revenues you will do? 400 crores?
That's 400 yearly. We are think the PAT is 70 plus 100.
70 crore plus should be the PAT for FY19. How will your business model change? Currently, 90% comes from the work you do for telcos, 9% when you lay your own fiber, and 1% from MGL.
Yeah.
How will this 99-1 breakup that you have of revenue change?
Yeah, this is we are one is EPC as a vendor we are doing for the telecom operator. Second is
how will that ratio change in terms of the revenues that you get from each of these businesses?
Your revenue mixer.
Your revenue.
Yeah, revenue mix means it is a leasing is 10%, and all other things is the EPC only, madam.
Yeah.
And this is we are going to one is EPC, second is we are duct sale also, that is in IP1 our license business also.
Okay.
That is also we are considering is the EPC.
Okay, just to come back to that revenue number, sir, you did 300 crores last year.
Yeah.
By FY20, what kind of a number will you do? 400, 450 crores, 500 crores? What should be the top line, the revenue number by FY20? That's the next year.
Sir, opportunities are more in India, but I can't say.
So you're not committing on that one. Okay, all right. What about your cash conversion cycle? If you could tell us, what is that period?
Cash conversions, it is that we are getting the payment about within 45 days.
Okay.
Majorly.
What are your unbilled revenues and your payables as a percentage of days?
Unbilled revenue, it is we are working period is 6 months.
Okay. 6
to 7 months. That bill will be received within the 45.
No, the number, the absolute number of unbilled revenues, and is that a concern for you? No. Are you having issues if any?
No issues. That is the we work is not completed. It is the running the work. So 25%. If we are completing on work 25%, we have to take the consideration into the revenue.
Okay.
That is the measure.
And your payables days?
We are payable days is to the customer.
What they owe to you?
They will give it is 45 days maximum, and after completion of work, and we will give the client also same terms.
Your debt is not high. What about your working capital? What is that number?
Working capital we are using in internal costs, madam. It is not measured. We don't have any debt.
Okay. All right. Thank you very much for joining in, and all the best for the IPO. So that is Mr. Dinesh Kargal, the CMD of Dinesh Engineers, the IPO, which is opened up today. We'll, we've almost run out of time on the show, so we'll take your leave with the news that it's flat, absolutely flat in the Nifty and the Sensex, but don't miss the volatile moves that we've seen up until now, and it promises to be a very volatile, choppy Friday as well. The mid-caps are still under pressure, down about 0.5%. Stay tuned, trading hour is up next.